Speaking of casinos, just reminded me of a conversation I was having. Did you see, and this is not a casino, but it might run the risk if it were to launch such a feature. So I wanted to get your guys' real-time feedback on this. You guys are Lava users, customers, investors, demo beta users or something, right? Familiar with the interface?
Are you trying to like out us on something? Nice try.
I mean,
yes.
I've heard of Lava.
You've heard of Lava. You're familiar with what it is. So you can deposit Bitcoin, you can get a loan in stablecoin dollars,
or in your bank account.
Well, you could get the loan in stablecoin dollar, and then you can off-ramp it from stablecoin dollar to your bank account, whatever way you like. And some people take the stablecoins and use it to buy Bitcoin. So they're effectively depositing Bitcoin to get a loan in stablecoin to buy Bitcoin. So you can see there's a little circularity there. It's like a form of leverage. My question is, if you were in charge of Lava, would you try to support that behavior more and give more like simplification of that in the UI and help people do that and help people understand the risks or model out the flows? Or would you try to somehow prevent that or limit that kind of behavior?
I feel like I'm being put on the spot.
I know this is a hot one.
No, but I mean, I think yes. I'm not. Today's use cases, I think, are leverage. I mean, leverage / shitcoin gambling. So you want to get a loan on your Bitcoin because you want to go gamble in Solana ecosystem or Ethereum and buy meme coins and try to moon and get leverage there. Or you're a Bitcoin maximalist, but you just want to grow your stack. You're willing to take that risk, which is the scenario you presented. So if we assume that's today's market and where the billions of dollars are being traded and not other markets yet, then if I'm starting a company that's in the mix there, I think the most wholesome way to do it while still making money would be to focus on the Bitcoin maximalists who want to lever up and do what you just said. Otherwise, you're probably in for a long road to wait for even more wholesome activities like getting a loan to buy a home or like a boat or your child's college expenses or whatever, or you have a sudden medical expense or something. Those
college, I think wholesome again.
I think that'll be. I think that will become a very large business, but like over a 10+ year period.
Yeah, I mean, I think it depends on what Shazan wants to do. I mean, I think I know these Bitcoiners are good, wholesome people, unlike the shitcoiners. Just kidding. There's plenty of degenerate Bitcoiners too. But I mean, on the one hand, I don't really think, personally, it's like it's not really any of my business what someone wants to do with their own money. And so if they want to do that, like, more power to them. I mean, I think it's obviously good to surface the risks and explain it. But like, I think an interesting story is in the early days, if I recall correctly, BitMEX got very, very little adoption on their platform until they were doing like 2x leverage or something. Then all of a sudden, when they offered 100x, they became a pretty big platform. And like, people are going to do what they're going to do. And obviously this is not like that. And also we have a question in the chat, like, how is this not capital gains? Like we've talked about this a lot in the past. You can find some of those earlier episodes, but they use discrete log contracts, DLCs, the Bitcoin's held in a contract and you only get liquidated if it reaches a certain price. I'm of the view that this is just a loophole intended to keep the wealthy and connected, and now it's available to everyone. I don't like the laws, but it is what it is.
What's the loophole?
The ability to take out loans against capital assets.
Oh.
But if I were Shazan and like that's what people want to use it for, I would probably allow them to use that. But I also have to say I can see the opposite side of this. I really respect Alex at River, who's basically, I don't want to do any lending. It's just not the kind of business I want to build. So I could see going either way. It just depends on what he wants to do.
I see no ethical issue with leverage to buy more Bitcoin. It can absolutely be irresponsibly done, but it also can be responsibly done.
Yeah.
If you're like in your early 20s, just starting your career, you don't really have that much money because you're just starting your career. But you have the conviction that, like, for example, we have about Bitcoin and like where you think it's going to go. getting leverage to grow your stack, I think, whether it's 2x or 100x matters, right? But like some leverage, I think completely is reasonable, because if it's a failed bet, you're young and you didn't even really risk that much money in the first place compared to your future earning power. So I don't think it's like an ethical quandary at all.
I think one way, and again, like I'm saying a lot of things tongue in cheek. I think ultimately people are adults and they can make up their own minds. It's not really my place to say, or the company's place necessarily. Although it could be the company's place if they have a specific vision of the world, but that just comes down to the founder. Like I don't think Alex wants to do this, and I respect that. But I also don't think it's like a bad thing to offer it. So I think one thing you could do is you could have like but potentially this could be interesting for Design Week. You could have a user interface or experience where you're allowed to take a loan against your Bitcoin to get more leverage, but there's just like a few like questions they ask you first. Like, for example, like, do you own any chairs? Or like, do you still have a kidney?
I thought you were going to suggest a Skibbity UI.
Max
These could be married
to help regulate this.
And you could have like a little kidney like figure, and it's like, if you still have a kidney, like we might suggest exploring that option first.
We should wrap up, but just the last comment, which you spoke to already, but program scarcity says, I don't get how the Bitcoin loan companies work. They hold the private keys. How is that not considered a capital gains sell? Well, Max responded to that specifically with Lava solution, in which the loan company, the lender, Lava is the intermediary and the lender. Neither of them have your private keys. They do not control your Bitcoin. So I think that solution is pretty airtight in terms of not being any kind of transaction of selling your Bitcoin. Other loan companies, I think it's more gray area. For example, with Coinbase, they turn your Bitcoin into CBDC, like their wrapped Bitcoin. And then it goes onto the Morpho chain, and like who knows how many layers deep it goes.
Yeah.
Not only are there all kinds of risks and scary things about that, but none of us are accountants or lawyers, so who knows what the IRS treatment of that would be today or in the future. But it certainly would raise more questions than the Lava approach.
But it's less about who holds the private keys, but it's really if you have a custodian that you entrust your Bitcoin to who holds your private keys, and then they do something else with your Bitcoin besides just hold it as Bitcoin. I think that's where the issue comes, because there's, long history of custodians who hold assets and give you, debt, credit against those assets that let you get cash out. That's a very well understood area, even if the asset is fully transferred to the custodian. So it's not really about the private keys, it's about like what they do with it.
I don't know. So I think if I understand what you're saying, DK, like if I own Tesla stock and the firm I hold that with, JP Morgan. People think I'm actually not a JP Morgan customer, but I've played one on this show. So I hold it with JP Morgan, let's say, and they then rehypothecate it and will, supply it to like short sellers, et cetera, and profit off of that. I think that's sort of what you're referring to. And that doesn't like cause me some tax event or something, but that's different in that. Whereas it's different than the case with Coinbase and Bitcoin loans, because I have one asset called Bitcoin and I give it to Coinbase. Then they actually trade my Bitcoin for another asset.
Right.
Wrapped Bitcoin, totally different asset.
Yeah.
Like the Tesla stock is not traded to a different, Rivian stock or something, right?
Is that true? Do we know that?
I'm pretty sure JP Morgan does not trade Tesla stock for Rivian stock.
Well, but could they?
Not as an investment decision, though, right?
No, but if they're just like, I don't know, all day doing some kind of like short term high frequency, I don't know if they are.
I think it is a good point you're making, that even when you have a traditional custodian holding traditional kind of non-crypto assets, that they sometimes do other things with those assets, and so far the history is like, the tax treatment on that is that it's not a taxable event. And my guess is a lot of that comes down to the fact that JP Morgan owes you the Tesla stock back because they did whatever they felt like with it. But as far as you're concerned, they showed it on your ledger in your account as Tesla stock, even if the Tesla stock got sold and rehypothecated 10 times over, right?
I think the honest answer to all of this is that all of these questions, whenever you're dealing with banking or tax laws, it's all extremely arbitrary. And frankly, I would say all part of the P and Shell scam in which we have lived for a long time. And
Tremendous amount of trust. Yeah.
tremendous amount of trust. Like, hey, I have $1 with JP Morgan. Where all of a sudden did they get $10 to go and gamble with? Like, I don't know. And so I think increasingly, I'm glad that we're giving this superpower to hack the system to everyone now. But I look forward to a day where these silly P and Shell games are no longer needed. That's my day.
All right.